The zeitgeist is definitely in favor of mutuals and purpose-led organizations. Some of that is because of Gen Z and their preferences. We have our research, and it's very clear that they want to work in purpose-led organizations. And what we find is that it's not just about delivering purpose through the products and services that we provide, but also through other means, through volunteering.
Hi, I'm Belden Menkus. Welcome to the Purposeful Strategist, the podcast that shifts the conversation about purpose and strategy from what organizations should do to what business leaders are doing and what they've learned along the way. My guest today is Jim Islam, Chief Executive Officer of OneFamily, one of the UK's leading financial mutuals. For 50 years, OneFamily has helped more than 1.5 million people build financial resilience through accessible, inclusive products, from ISAs and investments to child savings and protection. Rooted in its mutual ethos, the organization reinvests its profits to support the long-term well-being of its members and the community it serves. An actuary by training with over 2 decades of leadership experience across insurance, savings, and pensions, Jim joined OneFamily as CFO before becoming CEO in 2023. I'm really interested to learn how he's guiding OneFamily as it modernizes and grows its mission of inspiring better futures. Jim, welcome to the Purposeful Strategist.
Hi, Belden. Good to see you again.
Yeah, likewise. So if I understand right, OneFamily is celebrating its 50-year anniversary. So congratulations. But maybe just for a minute, you can take us back to how it got started, and then we can come to sort of where it is today.
Yes, indeed. We're proud to be 50 this year. We call ourselves a modern dynamic mutual today, and we are known as that. But when I looked at the very early documents, you clearly find that OneFamily, it was known as Family Assurance in those days, was set up as a new and dynamic friendly society. So the terminology used 50 years ago was very similar to the terminology we use today. So it started off from a small office in London with a handful of people, with a lot of ambition, courage, and a drive for innovation. And through that 50-year period, it became the largest child trust fund provider in the UK with a 25% market share. And what that means is that since September 2020, 1 out of 4 every 18-year-old, every person who has turned 18, has been a OneFamily customer. But also OneFamily today is a diversified investment and life insurance provider, offering life insurance and critical illness products through its Beagle Street brand, as well as simple investment products, in particular for those adults who turn 18, have a child trust fund, and, for example, they may want to buy their first home. So a lifetime ISA could be a product that they could buy from OneFamily. Our vision is inspiring better futures, and it's quite important to emphasize that in terms of the role that we have played, we've always been mindful of the impact that we have in society, in particular for those parts of society who do not have access to the kind of financial products that enables financial resilience. So if you look at child trust fund, the average fund size is around £2,000. That's the kind of a fund size that not many financial services provide, but OneFamily has always been there, as do some other mutuals as well, creating greater accessibility in society.
So that's a really interesting customer footprint. 25% of everybody turning sort of 18, and I assume for some number of years. That's really amazing. Is there something you're planning on doing with that? Because it just seems like there's not that many organizations, much less financial services organizations, that speak to 25% of a particular age slice.
Yes, so I think we were thinking about Gen Z before TikTok thought about them, right? And it's because of the role we have played in enabling children's saving. So at its peak, we had more than 2 million customers. And also, let me mention that our customers are also our members. They own the Friendly Society because we are a mutual. We currently have 1.5 million customers, which is quite a large part of the population. But we have access to more people than the 1.5 million customers would suggest because the children's products were set up by parents or grandparents. So, you can apply a multiplier to that as well. So our impact is greater than the number of customers that would suggest. Now, as Gen Z, if you look at some of the challenges they face, and we've done a lot of research in that, and some of the data is actually quite sad as well because this generation is a very hardworking generation. We've done our research and it tells us that more than half are in a side hustle or have had a side hustle at some point in time. And a third of them had to do that to meet the cost of living. So this is a generation that is particularly challenged when it comes to financial resilience. But they have the same hopes and dreams. They want to buy a home. But when we look at our data analysis, and only 23% of individuals in their 20s think that they can buy their first home. And this figure only goes up to a third by the time they're in their 30s. So, with these kind of challenges, I think we want to make sure that we create social mobility and social inclusion. As we have seen the child trust fund mature, so we do have a lifetime ISA product, which we think is a great product to enable individuals to buy their first home. It can definitely be improved, and we welcome the government's announcement around consultation around that product because there are some features of the product which can deter people from buying that. But I think offering a product like that is clearly something that we do and we think which enables social inclusion. And similarly, we acquired an online digital life insurance provider, Beagle Street, a few years ago. And again, we are taking it to a larger part of the market to create greater accessibility. Now, all of this is only possible because of the investments we have made in technology and capabilities. And that has been a big part of our transformation journey in recent years.
Mm-hmm. I wonder if we could focus on you just a little bit. So you've been in this world of insurance, pension, savings, investment for more than 2 decades. Could you kind of take us through your journey to become the CEO of OneFamily?
Right. So if I go back to my childhood, I grew up in Karachi, in Pakistan, in a financially constrained household. So lack of financial resilience or financial security wasn't an abstract concept for me. It shaped daily life. For me, the route to social mobility was education. I became an actuary. I was part of an actuarial training scheme, which was set up by a financial services provider. So I have deep respect for the role that education as well as financial services plays in enabling social mobility and inclusion. I am a product of that. And I think I'm one of those actuaries who probably moved away from core actuarial roots into more general management roles. In an early part of my career, I worked in a startup life insurer in Pakistan. And in a startup organization, you get to do a lot and you get to learn a lot. But then over the years, I worked in large corporates such as Legal & General and Lloyd's of London. The roles that I carried out would be finance director roles of various divisions, but also divisional CEO roles and divisional COO roles as well in those organizations. So through my career, I got a panoramic view of, various parts of the business. And that has enabled me to get into the CEO role that I have today. I think one of the things that I've been very clear about is that the role financial services organizations play in enabling financial resilience, but also the purpose that they bring to society. And if I look at the roles that I have today, so besides being the CEO of OneFamily, I'm also on the board of the RNLI, as well as on the board of the People's Partnerships, the provider of the People's Pensions. All three organizations are purpose led organizations. And this is something that really motivates me because I can then make a difference as well through these organizations.
I know what the RNLI is, but just for anybody who's listening who's not, could you just say a bit more about what they are and what they do?
It's a Royal National Lifeboat Institution for an island nation, an organization that is 200 years old, and its sole purpose is to save lives at sea.
So I guess that sort of takes us a bit up to the current day, but what led you to join OneFamily? And it sounds like just in the last few years, it's been under a fair amount of change. So when you joined, what was it, and how would you describe it now?
Right. So I think OneFamily is the first mutual organization I worked in. If I look at my career history, one of the key strands of my career has been an element, I would say a big element of transformation, building something new or transforming something. And that is precisely why I was indeed attracted to OneFamily. Being the largest child trust fund provider in the UK, the broadest challenge is because this is now a legacy product. It's not something that's being sold right now. So, for long term sustainability, OneFamily had to reinvent itself to create a sustainable organization with new lines of business. It also needed a lot of technological transformation because an aspect of OneFamily's growth has been acquisitions through its lifetimes. It has acquired a number of organizations. And in many organizations, when you acquire so many organizations, you end up with a number of legacy platforms and old technology. So there was a technological transformation. There was a general sort of entering new products, entering new channels, building new capability. And all of these transformational elements was something that I was really attracted to. And when I look back on how far the organization has come from being a child trust fund provider to a diversified, almost like a fintech mutual, which offers investment products, offers life insurance products, and creates greater accessibility for its customer base by accessing them through a number of channels as well, whether it's online, whether it's via telephone, or via some of our long-standing partners as well.
There's clearly been this transformation journey over a number of years. What would you say the strategic focus is now, as you look ahead?
I think one of the things I have been clear about is that as an organization and as a mutual, we need to recognize the macro trends in society and how they are impacting our customers. So I often talk about the five macro trends. So the ones that we have identified are number one, threadbare safety nets. And what it's saying is that given some of the fiscal challenges that we have in the country, people are having to take greater ownership for their own financial security needs. But at the same time, we know that 11.5 million people in the UK have less than £100 of savings to fall back on. So there is a serious challenge here, and therefore financial services providers can offer products which creates greater financial resilience. The second one I've talked about briefly earlier is around social inclusion and lack of social mobility, in particular for Gen Z, and how do we enable that through our products and services. The third one is working revolution. Whether you talk about artificial intelligence or post-COVID working patterns, there's some data out there that talks about more than 60% of primary school children will be in jobs in the future that don't exist today. Now, in some ways, that's nothing new. When I was growing up, I don't think I thought of a career as a YouTube influencer or a social media manager, right? So change has always been there. But I think it's the pace of change which is important. And I will quote Justin Trudeau here, who said that the pace of change has never been this fast, yet it will never be this slow again. And I think that is the pace of change is what's impacting the working revolution. And how do we enable our workforce, but also the wider society to adapt to that. The fourth one is what we call the 100-year life. It's a great achievement that over the last 50 years globally, life expectancy has increased by 5 hours every day for the last 50 years. But if you travel using the Jubilee line and you travel from Westminster to the east, life expectancy falls by a year for every stop for the next 6 stops. So there's a lot of disparity there. And therefore, again, there is room for financial solutions for that as well. And finally, electric living, which relates to climate change and how do we enable our customers to adapt, but also make an impact as well through our investments. So these five trends are what form the basis for our strategy. I don't think we are at a stage where we are addressing all the five trends, but at least it forms a framework in how we develop our strategy. And then when we look at our proposition, our services, our culture, our people, the capability that we bring, all of those elements form part of these five key trends. We talk about it a lot internally. As part of the transformation, we launched a new set of values, and those new set of values, along with our vision, along with an employee value proposition, has enabled everybody to come together. We have built talent internally, but we also brought external talent where needed, because I think that along with technological transformation, the people side is absolutely the number one strength that we have, which enables us to do what we do.
Jim, you've said out a lot there that I want to come back to, but just for a minute, if you could talk us through the how of strategy. Like, it often ends up seeming like it's something that just came out of the ether. So who got involved? How long did it take? Was it a bunch of meetings? Did it all come together in one afternoon? How did all that work?
This is one of the things that we're very proud of, the what I call the one team culture we have in the organization. It was an extremely collaborative process. And clearly, the board and the execs are important in driving that thinking, but it is absolutely important given the scale of the transformation that the organization has gone through, that everybody's hearts and minds was in this strategy. And therefore, we are talking about listening to all our people, number of workshops, bringing them together. So there are some structured conversations, there are some unstructured conversations. And as we have this feedback loop, it has enabled us to put something together, which has the buy-in not only from the board, the execs, the senior leadership team, but the rest of the organization as well. Communication is a core part of this, and we do that a lot. It's not just the town halls, but the regular communications, but informal conversations as well, and talking to our people. So to answer your question, actually, there are a number of things had to be done, both structured as well as unstructured, but it was very much a two-way collaborative conversation.
One of the things I'm really glad you called out there, because I think it often gets overlooked, is what you described as the unstructured. I think sometimes when people describe how they develop their strategy, it sort of sounds like a sausage machine. And often, sometimes the important things are somehow outside of that, seemingly random conversations or some event that occurs that changes things. That's really interesting.
Absolutely. And I think one of the strengths we have is the purpose. I think that is one of the strengths of being a mutual. I'm not suggesting that non-mutuals don't have a purpose, but purpose is part of the DNA of the organization. Doing right by the customer, feeling for the customer, looking after our customers. I don't have to train our people for that. It's part of the DNA of this organization. And that comes with such great solutions as well. And one of the things I might just mention here, because it's something that's quite close to my heart. One of the key strands of our strategy is to give voice to the voiceless. We campaign for our customers as well on many issues. And one of the issues, and I have to give credit to our employees because this is not something that came up from senior management. Within the Child Trust Fund customer base, across the UK, around 6 million children ended up getting a Child Trust Fund. Of those 6 million children, roughly 80,000 are children who get classified under the Mental Capacity Act as children with mental incapacity. That's a technical term that's used. Now, when the Child Trust Funds was set up, I don't think any thought was given as to how these young adults with mental incapacity will access those funds. The only process, and it is still the current official process, is to go through the Court of Protection, which is a hugely cumbersome process and costly as well for fund sizes of £2,000 on average. Now, this was an issue that was identified by our team quite early on as these funds came for maturity. And we worked on a simplified process, which actually relies on an existing DWP process for benefits, because we are saying, far greater amounts are being paid through benefits to these children's guardians, and therefore we can rely on that to pay the sums easily rather than asking them to go through the Court of Protection. So we came up with that process, and many other financial providers now also provide that process. And we have been campaigning along with campaigners such as Andrew Turner to actually bring about changes to make it easier for young adults with mental capacity and their guardians to access these funds, which are actually used to get tools that help them, training, and many useful purposes. This is an example of something that has only come about because of the strong customer centric and purpose led culture that we have in the organization. This was not a top down process, it was very much a bottom up driven process, which I'm extremely proud of.
Jim, I think you're right to be proud of it. I think people don't, I'll admit I don't often think of that as an issue. You sort of assume all adults don't have any kind of mental capacity issues. But of course, a percentage does. And in some ways, it's great that now those people are being able to take a bigger place in society. But it does mean we all need to kind of anticipate that people are going to have different needs, different capabilities. Yeah, no, I think, like I say, right to be proud of that. If I could come back to something you said about mutuals, I'm just wondering whether you see that there might be, I could say resurgence, but that almost sounds like there's sort of been a decline. I'm not so sure there has, but yet a further growth of the mutual model, the customer-owned model. There's so much noise sometimes about, financial services companies doing bad things and ripping everybody off. Do you see that that's going to be a big thing, or is it should be, but maybe it won't?
I think one of the things that we often don't realize how strong the mutual and cooperative sector is globally. It is making a huge impact in Europe and various other continents as well. So it is definitely a thriving sector. It's also a thriving sector in the UK. Mutual and cooperatives, you look at it, from building societies to life insurance mutuals to even cooperatives that work in other parts of the market as well. It's a big sector. It's fair to say that at least we have seen it through our research that post-COVID in particular, the zeitgeist is definitely in favor of mutuals and purpose-led organizations. Some of that is because of Gen Z and their preferences. We have our research, and it's very clear that they want to work in purpose-led organizations. And what we find is that it's not just about delivering purpose through the products and services that we provide, but also through other means, through volunteering. One of the things that I think as a nation we should be really proud of is the strong culture of volunteering. As much as 66% of the adult population in the UK has volunteered or taken part in some active civic engagement. This is something that we need to embrace. And as a result, within the organization, we allow 3 working days of volunteering to our people to go out and work in communities. And we also encourage senior execs to take part in other volunteer activities, such as mine on the board of the RNI as well. The financial services industry predominantly does a great job in offering solutions to the population. We have a much bigger role to play. We need to have what I would call a possibilist mindset rather than complaining about everything that's not working well. We need to look at, what can be done about these challenges, take that approach. And I think there's a lot more that the mutual sector can do.
In my mind, I often connect mutuals with community. Do you see it playing out that way, or is it, no, it's more a national community? It's also digital, that the physical space is less important. How does that work?
So I think if you look at the history of mutuals, they were based on the concept of unity and sharing. So if you look at some of the current debate, which are trying to pull communities apart, mutuality brings people together. And that is one of the core strengths of mutuality. And in that respect, community can have so many different definitions. Clearly, there can be some mutuals addressing a particular part of the country. We, as OneFamily, we are a national mutual, so we have customers all across the UK. But as you have rightly pointed out, communities can be formed around a purpose. And this is where the purpose of a mutual is a very strong bond that brings communities and people together. That's how I would look at that.
Yeah. I'm sure one of the things you've been thinking about, again, you touched on a little bit, is how AI and maybe automation more generally is reshaping financial services. But also, I'd assume as a mutual, it's very important for you to stay human-centered. How do you balance that? Or is it a balance? Do they tug in different directions, or can you get them to pull all in the same direction?
This is where I find that, again, our purpose is a great strength. So we don't look at AI as AI. We look at how can we provide better service to our customers. Does AI help in that? We'll use it. So, for example, we are using it in our customer service area. So, rather than our customer service representative who is on the phone with a customer trying to capture the conversation, toggle between screens, capture all the data, I want that they focus on the customer. They share the empathy that's needed. They provide the service that they needed. And in that respect, the AI tool helps in capturing the conversation and gathering the data. And that's a good use of AI to deliver better service to our customer. And that's why we are finding that within the organization, there greater acceptance of using tools like that. If our customer wants to talk to a real person, that's what we will offer. But at the same time, where AI can be used to enhance productivity, to improve quality of the conversation, to improve the customer experience, we will use it with the right guardrails in place.
One of the things you've touched on a few times is financial inclusion. And I think you've sort of linked it to social mobility. What does that mean? How do you define it? How do you measure it, if one can measure it? And then is it linked to social mobility, or are they just two things you're both interested in?
It is linked to social mobility because that financial inclusion enables that as well. At its most basic form, it's making sure that people are aware of the products and then they can access those products as well. So there's an element of financial education, and then there's an element of access to the products as well. And these are the two areas that we are very much focused on. We welcome the fact that the government is now bringing financial education within the school curriculum. Absolutely critical that that's done. And we also work with a number of charities as well to enable financial education. But at the same time, we make sure that we have products available, in particular through digital channels, to create greater accessibility, but we reduce the entry points as well. So we don't create artificial barriers, which means that people with small sums of money can't invest with us. So we enable accessibility as well.
What are the biggest shifts you're seeing in what customers expect from professional service providers, but maybe even more broadly than that?
What's clear is that purpose is important to customers, being a purpose-led organization. And it's not just about the product, but what else the organization is doing. That's quite important. I think accessibility, and here I'm talking about an omni-channel approach. Some customers prefer digital, some customers want to come and do all online, but some customers want to talk on the phone. And we need to be able to provide our services through those variety of channels, and that's what we do. Transparency is also quite important. When we offer simple products, we make sure that the language that we use and how we interact as well, it's important. I think the delivery of the service is important. In this day and age of social media, if you're not providing good service, it's out there through Trustpilot scores, through customer satisfaction scores. So I think providing good customer service is absolutely critical. If the customer service is not good, I think it impacts the business in a very adverse way. And I think that is something that organizations have to be really mindful of.
If I could add one thought to that, is the benchmark for what good service is. It isn't the benchmark in your industry. It's the benchmark anybody experiences anywhere. That's sort of what people tend to expect everywhere.
Absolutely.
Which is difficult sometimes.
Yeah.
A little bit of a background question, maybe you could have asked at the beginning, but you and I met through Kate Grusing of Sapphire Partners. And for those who don't know Kate, you should definitely have a look at what she's doing. She's been a guest on the podcast, real pioneer in opening up talent at a senior level for lots of organizations. But curious how you know Kate. How'd you get to know her?
I've known Kate for a while. I'm a big fan of her. I mean, she's, again, a great example of a purposeful leader and the impact she has brought about in the industry. I got to know Kate because she headhunted me for a role. And then I actually used her to headhunt for some other roles as well myself. So I've worked with her on both sides. But Kate and I talk a lot. I often pick her minds on various issues. She brings such a fresh perspective to everything. So, it's the richness of the conversation that I really enjoy with Kate. I did listen to the interview you did with Kate, and yeah, it was absolutely spot on.
Yeah.
We need more Kates in the financial services industry, if I put it that way.
I might argue we need more Kates. Full stop.
That's right. Yeah.
Yeah. I mean, we've covered a pretty wide range of things, but is there anything we haven't touched on that you'd like to share with our audience?
I would like to sort of probably conclude the conversation with some positive thoughts, because oftentimes, the reality is that good news is always gradual, where bad news is sudden and impactful and gets covered. You should take a moment to recognize how much the world has improved. I was looking at some data, and on October 6th of this year, renewables generated more power than coal. UK remains world's largest next exporter of financial services. I've talked about how the human lifespan has increased for the last 50 years or so. But as Thomas Macaulay said a long time ago in 1830, on what principle is it that with nothing but improvement behind us, we are to expect nothing but deterioration before us? Right? So I think change is the constant today, right? But it is also sort of important to recognize that it's uneven. Some communities are surfing the wave, others are being hit by it. Our challenge is to make sure people feel carried forward, not swept aside. And I think that's what we need to do as, in particular, as financial services organizations, but also as mutuals as well, having that possibilist mindset and talking about the positive things and how we can make a difference.
I like that possibilist mindset. Jim, that's a great note to end on. Thank you so much for joining us. Thanks for being part of the conversation.
Thanks, Belden. Good to talk to you.
Thank you for joining us for this episode of The Purposeful Strategist. In addition to being available on our website, you can find us on Apple Podcasts, Spotify, and Google Podcasts. If you enjoyed this episode, please do follow us and leave us a 5-star review. It helps others find the podcast. Thanks again, and join us soon for the next episode of The Purposeful Strategist.